Good afternoon, Anastasia. I think as you equally surprised, so am I. I think listening at some of the comments from Parliament members, you get a sense that even though there's been that consensus leading to the agreement of March the 12th, but the question is, did it have to wait till today to be announced? It gives a sense of it was somehow rushed, and questions as to, leading to the day, could these discussions not have taken place prior? Of course, there's a lot of moving parts to this, and one of the sticking out issues, one of the key issues, I think, to the postponement is that proposed or possible 2% increase in VAT from 15% to 17%. Now that's quite considerable, considering what 1% is done for South Africans when we had that 1% increase. Now, obviously, this is in part in reaction to the current global backdrop in which the South African government has to respond. But at the same time, I think prudence is needed. So I think more time was needed to find the right balance, because just hiking taxes alone to fill the gap in terms of the trade policies and where we are at the moment, in particular with the US, which also is a trigger to this. There's more that needs to be considered, because we are now in a cutting cycle from the South African Reserve Bank. Inflation is coming lower. There's expectation that 2025, there will be increased disposable income from households, which will stimulate consumption and filter through to the economy in terms of that GDP growth. Now, if we increase taxes significantly as 2%, which is quite a considerable increase, I think that also undoes that interest rate lowering that we're seeing from a monetary policy perspective, as eventually, the households will be affected with that. I mean, the VAT will across every other product, as we know here in South Africa. So there's a lot to this, which I think prudence is necessary. Of course, as you mentioned, we saw that initial reaction from the Rand to this, but we are better off where we are than where we could be, given the sentiment that was brewing around, that announcement at the time it was made.
Okay, so apart from the local dynamics, where we've seen that general surprise around the budget, and you touched on that, what's the overall sentiment then when we look at global markets? What's driving us?
Yeah, markets are becoming jittery. Coming into 2025, there was that expectation that the Trump trade is going to be very positive across the board. We saw markets, trading in the green for the longest of times. We've seen all-time highs from different instruments. Bitcoin is one. We've seen all-time highs in gold. Now, that is concerning, because if we're seeing an all-time high in the price of gold, that's quite a risk, a good risk indicator in terms of market sentiment. So the market is very jittery at the moment. And one of the main drivers around the market jitters is the trade policy wars, the trade wars that the current President Donald Trump is now, really going into full force. And this is just the start of his term. We're only in February, so there's a lot more pace at which he's probably going to pick up as he goes, and keeping up that pace as well. So those are the jitters that we're seeing, driving the markets. And of course, the geopolitical risks, the main pressure points being Eastern Europe, being the Middle East. We've seen comments around that. Now, if that comes out, the real risk that we're really seeing being priced in by markets is this trade war that's coming out, because now other regions and other countries are standing their ground in terms of rather having a better negotiated deal. We've heard South Africa, in our case, coming out and saying that we would rather have a better negotiated deal than just a trade pact. So a lot of countries and regions are taking a particular stance, which is different to what the expectation was, end of 2024. So that is a very big driver of sentiment and the jitters that we're feeling and seeing around the markets.